October 10th, 2025. It was supposed to be just another Friday. But Wall Street had other plans. This day just got painted black. I'm telling you, what a bloodbath. Almost no analyst saw this coming. So at the opening bell, the market just plummeted. It was brutal. Let's break down the damage. The Dow tanked 878 points. That's a drop of over 3%. And it was flirting with a meltdown, triggering circuit breakers all day. The Nasdaq got hit even harder, down 3.56%, its worst day since last April. Tech got absolutely hammered. And the S&P 500, no one was safe. It fell over 2.8% and crashed straight through that key 4,200 support level. Ouch. I know what you're thinking. What just happened? This sell-off was far from a solo performance by the US market. Panic spread like wildfire across the globe. Europe's STOXX 50 closed down 1.8%, with Germany's DAX and France's CAC 40 falling 1.6% and 1.7% respectively. In Asia's overnight trading, Japan's Nikkei 225 opened 1.2% lower, while South Korea's Kospi dropped over 1%. And it wasn't just stocks. Other risk assets were also decimated. WTI crude futures plunged 4.2% in a single day, falling below $80 per barrel. Bitcoin plunged from $62,000 to $54,000, dropping over 13% and wiping out billions in long positions. This was a global rout, plain and simple. The most shocking part? In just one trading day, over $2 trillion in global market value vanished. That's the size of an entire mid-sized developed nation's annual GDP. So how did this happen? Was it a short-term policy shock that triggered panic, or the long-building cracks in the global economy finally breaking open? In this video, we're going to peel back the layers from the spark that set it off to the deep-rooted structural issues. The storm's first and most explosive trigger came straight out of Washington. At 9 a.m. on October 10th, President Donald Trump dropped a massive bombshell on his social media. To protect American industries, the U.S. will impose a 100% tariff on $500 billion worth of Chinese imports covering electronics, machinery, textiles, and more. And just like that, boom, global markets went into chaos. Investors panicked, futures crashed, and the entire financial world was on edge. This wasn't just another political statement. This was a shockwave that ripped through every trading floor from Wall Street to Shanghai. The message was clear. The trade war is back, and this time, it's going nuclear. So why is the market freaking out like this? It's pretty simple. Nobody expected Trump to go this hard. Wall Street was thinking maybe a 10 to 20% tariff hike, tops, but boom, he doubled it. A full 100% tariff. That's way beyond what any analyst predicted. And what does that mean? It means trade costs between China and the US are about to skyrocket, literally multiply. Take a simple example. A Chinese-made laptop exported to the US used to cost about $1,000. With the new 100% tariff, American importers now have to pay another $1,000 just in taxes. So that same laptop that used to retail for around $1,500 could now jump all the way to $2,500. Consumers won't want to buy it, demand tanks, and Chinese manufacturers get hit hard with fewer orders. So yeah, the market panic totally makes sense. This is the real impact of an escalating trade war. But here's the real kicker. This move by the two economic giants basically means the trade war just shot up to a whole new level. And that fragile global supply chain, the whole system for making and selling stuff that was already shaky, it's about to be thrown into complete chaos. The U.S. Retail Association hit the panic button that same day, putting out a statement saying something like, well, this is it. Get ready for a huge price spike on Christmas goods. A lot of average families are about to see their cost of living jump. That warning just made the markets even more nervous because everyone's biggest fear is U.S. inflation roaring back. So what happened? Investors got spooked and started dumping stocks left and right. Any company doing business with these two countries, whether they make components or run stores, saw their share prices drop together. Okay, so the tariff shock was bad enough, right? But you think that's bad? Brace yourselves, because a second bombshell just dropped from Washington, sending market panic from bad to catastrophic. The U.S. federal government has been shut down for 10 days now. But this time, they've pulled a stunt that shocked everyone. Let's rewind. There have been 21 government shutdowns since 1976. Historically, federal workers were put on unpaid leave, but got their back pay eventually. Not this time. They just upped the ante by announcing permanent layoffs. The official reasoning? The two parties are still at war over the 2026 budget. The government simply run out of money to pay salaries, so the only option is to cut jobs. The scale is enormous. About 80,000 workers are affected. They're slashing 30,000 Border Patrol agents, 20,000 Social Security staff, and 10,000 EPA employees. The sheer number is insane. It matters a ton. Think about it. If you're worried your next paycheck might not come, or you believe prices are about to jump, are you going to take out a car loan or buy the latest iPhone? No way! You're going to tighten your purse strings, right? Well, that's exactly where a lot of Americans are right now. And why? It boils down to two big fears. Fear Hashone, losing their job. When the government shuts down, tons of public employees stop getting paid. That kind of stress spreads. It makes other workers nervous. Is my job safe? And when you're worried about unemployment, you stop spending on anything non-essential. Fear #2, prices going up. Let's be real, people aren't dumb. They hear the news about new tariffs on goods from China, and they get it. Smartphones, laptops, clothes, furniture, it's all going to get more expensive. All right, folks, let's talk about October 10th, 2025. That Black Friday will definitely go down in financial history. But here's the thing. It wasn't some random accident. This was basically an accident waiting to happen. The U.S. stock market was ridiculously overpriced. The economic foundation was shaky, and the political situation was a mess. These problems were like a powder keg just sitting there. The tariff threats? That was just the final spark that made the whole thing blow up. This whole crisis taught everyone some important lessons. First, nothing goes up forever. When everyone's going crazy and acting like there's no risk, that's usually when the real danger is closest. Second, for financial markets to be stable, it's not enough to have a healthy economy. You also need sensible policies and countries actually working together. You know what they say, history doesn't repeat itself, but it often rhymes. From the 1929 Great Depression to the 2008 financial crisis, every market crash comes with painful adjustments, but each time, the market eventually recovers and finds a new balance. The panic from this Black Friday will eventually fade. What we need to do is actually learn from it, to see what truly has value during the volatility, and to hold on to what's certain amidst the chaos. Because in the long run, the most basic rule of the market never changes. Prices will eventually reflect true value, and rational thinking will win out over madness. Markets will always rise and fall, but rational thinking remains the rarest asset of all. If today's video gave you something to think about, don't forget to like and subscribe. Let's face this financial storm with clearer eyes and steadier minds. I'm Alpha Atlas, and I'll see you in the next On.